Good morning, everyone. Today is September the 20th. My name is Anne-Marie Band, and this is Moneyball Morning for the Benzinga Pro platform. FOMC meeting started today, and we can see traders caught in a range. So I know our images are a little bit messy, but let's go from big time frame to small time frame to see what we're actually watching. So on a weekly formation, many of us could argue, hey, this is a bear flag. Some of us could argue, hey, this is an inverted head and shoulders pattern. Well, one of those has a bearish solution, and the other one of them has a bullish solution. So what we have to do is think about what should happen if it's bullish and what should happen if it's bearish, and plan appropriately. The cues look a little worse. Now, are these exact? Of course not. But we do see the bear flag break from this formation. However, we're still holding the inverted head and shoulders, if indeed that was going to be a thing. What we do know is the following. The Fed's going to meet for the next 2 days, and tomorrow they'll tell us what's going on, what they're planning on doing. Powell has been very transparent every time. He said, hey, listen, we're going 75 basis points. He has not said we're going 50. He's not said we're going 100. So my estimation is he's going to do what he told us he would do in the past, because he's been very transparent. The question is, what about the language around the commentary? And that's really what everyone is looking for. There are people that are hoping that as things begin and continue to erode, like we're watching them from the macro space, that he will say something that says we're going to ease up. The key thing we want to watch is, if he doesn't, does that scare the market? And do we break down? So at the end of the day, the only thing that never lies to us is price. It doesn't mean that price doesn't test areas that we expect it to hold, break them, and then recover, because obviously they do. We can see it here. We can see it here. This does happen. What we have to do is watch the break and then let the break confirm for us. If we watch the price action do what it needs to do, in terms of our thought, let's say we're thinking it should break down. If it moves up and then it doesn't break lower again, we know we're wrong. If it moves up and it does break lower, we know we're right. We don't win any prizes for being first. The only prize we win is cash if we're right, not if we're first. And many times if we're first, we are going to see drawdowns and really reversal of the formation. So let's take a look at the next bit of information that seems very mixed. So on a daily price action event, we are underneath all the moving averages that we watch, and we just moved above this VWAP only to come down and test it again. We're about 15 cents, 30 cents below it right now before the market opens up in just a little bit. So what's that telling us? We're still chopping around. This was yesterday's candlestick. We don't have anything for the overnight, but we can see that this candlestick is very bullish. These kinds of candlesticks have a name. They're called Maribozus, and except for that tiny little wick down there, the low of the day was the open and the high of the day was the close. Now, we've completely engulfed this candle. We filled the gap from the lows, and so this open here is going to do a couple of things. It's either going to come into this area and hold this range and move to the north, or it's going to come into this area and it's going to lose its range and come into the south. We see the areas that it could come into the south. We see the areas that it could go into the north. Our choice as trader is to say, if I want to take the bounce down here, what is my risk? If I want to take the fade up there, what is my risk? But come to the regions where everybody is making a move and then decide what you want to do. Don't just jump into these trades because you go, I think it's going to do X or Y, right? We have too many ways to lose money that way. What we do know is the following. In the overnight, for the trading day today, we tried to hold this edge, try to move up over it. We faded, and we're now close to the floors of support. Which way will we go? I don't know, but I do know this. If it comes all the way down here, most of the time, the traders have bought. So I'm going to look for longs at the base of this formation. What have they done here? Well, most of the time it's come up into this region and it's been short. And so what I'm going to do is go wait until I get up here for the short. Here's the thing. If you say, wow, that could break out because I've got higher lows, my stop is going to be very tight because I know that if I get above this 292, I'm probably going to the top of this range. So if I go short at 292.40, my stop is going to be around 292.85, 293. Could it stop me out and then move back again? Yes, that happens. In trading, you're going to lose. It just happens. Your job is to lose as little as possible and to use the formations to get back into the good trade. I know this was a little bit longer. I just wanted to share with you some topics on how to navigate the price action coming into this space and what the traders might be doing. We could see quite a bit of whipsaw. And again, we've got to keep our eyes on the DXY. That's very likely to spike or fade depending on what it is that the market thinks is going to happen. When the dollar moves up like this, the markets will drop. It's moving very, very high. A lot of people are thinking the dollar is going to collapse. I don't see how, as long as we are the reserve currency of the world. But it's not going to go up in a straight line. Nothing does in the market. So be careful, stay alert, and I'll see you at the town hall tomorrow. I want you to be there.